Picture this. In a roller coaster ride that could redefine global trade dynamics, U.S. stock futures skyrocketed overnight as President Donald Trump's fiery rhetoric toward China softened just enough to spark hope for a deal. But here's where it gets controversial. What if this is just a temporary lull before the storm? Markets wrap, October 12th, 2025 at 10:38 p.m. UTC, with updates rolling in on October 13th, 2025 at 12:57 a.m. UTC. Let's break it down for those new to the financial world. Equity index futures, which are essentially bets on how major stock indexes like the S&P 500 will perform in the future, surged more than 1% alongside the Nasdaq 100 contracts. This upbeat shift came after a weekend of jitters when escalating trade tensions had rattled investors' nerves. Oil prices bounced back strongly, climbing over 1%, while cryptocurrencies steadied themselves following a brutal sell-off the previous day. And this is the part most people miss. Treasury futures dipped slightly, reflecting a mix of relief and lingering caution in bond markets. The catalyst? President Trump hinted at being open to negotiations with China, dialing back the heat after he had threatened to slap 100% tariffs on Chinese goods in retaliation to Beijing's export curbs. This pivot improved overall market sentiment, turning what could have been a prolonged downturn into a brief rebound. For context, imagine tariffs as extra taxes on imports that make foreign products more expensive. Trump's threat was like waving a red flag, warning of potential economic pain. But his willingness to talk was the olive branch that calmed the waters. Yet not everything was smooth sailing. Silver prices flirted with record highs due to a historic short squeeze in London, a phenomenon where traders betting against the metal's rise were forced to buy back in, driving prices up dramatically. Meanwhile, gold hit a new all-time peak, adding to the buzz in precious metals markets. These swings highlight how interconnected global events can be. Trade worries ripple through commodities, creating opportunities and volatility that seasoned traders might exploit, but beginners could find overwhelming. But here's the kicker. Trump's aggressive trade stance has always been divisive. Some hail it as tough love to level the playing field, arguing it protects American jobs and innovation. Others decry it as reckless, potentially sparking retaliatory measures that hurt U.S. consumers and companies reliant on Chinese supply chains. Could this openness signal a genuine detente, or is it a strategic pause before more tariffs? And what about those commodity squeezes, fair market forces, or manipulative tactics that benefit big players at the expense of everyday investors? What do you think? Does Trump's shift toward diplomacy mark the end of trade wars, or is it just a breather in a longer battle? Share your thoughts in the comments. Do you agree this eases tensions? Or does it raise red flags for future conflicts? Let's discuss.